Goods costing $88,000 were completed and transferred to finished goods. The journal entry would be a debit to finished goods inventory and a credit to work in process inventory for $88,000. In number 9, we have finished goods that cost $83,000 to manufacture that were sold on account for $119,300. We're going to debit accounts receivable for the sales price. We're also going to recognize sales revenue for the sales price, or $119,300. We're going to debit cost of goods sold for the cost, which is $83,000, and we also need to reduce or credit finished goods inventory for $83,000. All right, the first thing that we have to do here is we have to record the requisition slips. We know that we had job 429 that had $250 or $2,500 of materials, job 430 had $3,600, and job 431 had $4,400. So our total material requisitions are $10,500. When it comes to our time tickets, again, similar exercise. We know how much is attributed or should be assigned to each job, and we also know what the total direct labor is, which is $12,800. All right, the last thing I want to point out before we get to the journal entries is the manufacturing overhead is applied or assigned to jobs based on 80% of the direct labor cost. And again, that's given to us in the problem. So I want you to simply multiply the direct labor for each job, right? And you can see that job 429 had direct labor of $2,200, which means we're going to apply 80% of the direct labor cost, or $1,760 of manufacturing overhead. If you add up all the manufacturing overhead, or you could simply take the direct labor, the total direct labor cost of $12,800 and multiply that by 80%, you would get $10,240. That's how much overhead we're going to apply to each job. All right, in the first journal entry, we want to record our direct materials. So we're going to debit work in process inventory for $10,500, and we're going to credit raw materials inventory. We're also going to debit work in process inventory for our direct labor, again, $12,800, and we're going to actually credit factory labor for the same amount. Right, that last journal entry, we're going to debit work in process for our estimated manufacturing overhead for $10,240, and the credit is going to be to manufacturing overhead. Right, we began the accounting period with a balance of $3,200. We were told that $2,000 of that belonged to or was assigned to 429, and $1,200 was to job 430. We also know that we had direct materials of $10,500, of which $2,500 belongs to 429, $3,600 job 430, and $4,400 for job 431. And that total, the total that we assign to the jobs, must equal the total that we post to the work in process inventory. We also had direct labor of $12,800, and again, similar to direct materials, we're going to simply assign those costs to the job in which it incurred those costs. That last piece is we need to assign our manufacturing overhead. And again, we already calculated that. We said it was 80% of our direct labor cost, or $10,240. What we want to do here now is we want to total each of the job. We also know that we completed job 429. Job 429 had a total cost of $8,460. We know that we completed it, so we need to transfer it from the work in process inventory to the finished goods inventory. We're going to do so by debiting finished goods inventory and crediting work in process inventory for $8,460. The next thing we want to do is we simply want to post that journal entry, again, focusing on what's happening in work in process inventory. So we need to credit work in process inventory for $8,460. All right, let's go ahead and post the $8,460 to the work in process inventory. Again, that was a credit. If we net the debits and the credits, The ending balance in work in process inventory is $28,280. Again, that balance must equal our partially completed units or jobs, which it does. You can see that job 430 has $10,200 and job 431, $18,080 for a total of $28,280.